The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at what has been moving in these markets here as of late, it's no secret that tariffs have been a dominant driver in the conversation. A lot of volatility has been seen really over the last month or so. We've had a number of reports thrown in there, and a lot of folks are really looking at some of the supply-demand fundamentals in these markets across commodities and just the global picture as a whole. Let's talk about this today. Joining us for a conversation, I'm excited to welcome her to Market Talk. Susan Stroud with Noble Ag joins us here today on the show. It's Susan. It's good to talk with you. Thanks for joining us.
Thanks for having me.
Well, let's dive in. And we were talking about this a little bit before the show. And man, oh man, just looking across the landscape here, there's been so much volatility in these markets. I'll just say that I feel like it's been hard to really stay on top of all the moving parts and all the headlines that are out there, Susan.
Yeah, tell me about it. It's been, yeah, I mean, this isn't my first rodeo with a trade war, but this one, it's like rapid fire. It's been really difficult to keep up with this administration. And I think part of it too is we came into 25 with a lot of unknowns. We didn't have 45Z guidance yet. And there were several things that had already kind of, they were a shakeup, and we knew this was coming with Trump. He campaigned on this. And, but I think even those of us that have been through this before didn't quite expect it to ramp up this quickly. And there's just so much. It's like we're living and dying by each Truth Social post, or I should say markets are, and then the rest of us are just left trying to keep up.
Yeah, absolutely. It's just, it creates a lot of chaos in the markets, a lot of those daily moves and that volatility and more. But I really want to dive in on a couple things here, especially when it comes to U.S.-China relations and how, say, South America, how Brazil plays into all of this. And you've been doing some awesome work kind of analyzing a lot of this. And let's on the video feed, let's pull up some charts that you shared with us and just talk about overall Brazil stepping in to be China's top bean supplier, because that is a big difference from the first go around with a trade war, right, Susan?
Well, things have changed so significantly since. And I think it's really important to point out, though, that Brazil's actually been the largest bean exporter in the world for well over a decade. So it was back in 12 or 13 that they first out exported the US as far as beans go. And they haven't looked back since, but it was a defining moment, the first trade war. And obviously by looking at the chart, you can see that the way that things have shifted and changed, that was market share that we lost, and we just haven't gotten it back.
No, we haven't. That's a great point. We haven't gotten it back. And I think about the massive infrastructure investments and more that China has had in Brazil. And I mean, it seems that their growth, port growth as well. I mean, let's talk about that a little bit here. Another chart that you shared with me kind of shows how some of this growth is all, kind of in lockstep. Let's talk about a couple of these charts.
Yeah, so the biggest thing with Brazil is that they have been growing at a breakneck pace, but it's been for more than 2 decades now. So when you look back at the past 20 or 25 years, they've averaged an annual increase in planted area of 5% per year for each of the past 20 plus years. And so, this is the product of that you're seeing on this chart. And so you can see, you go back to 2000 or even like 2010, they were they were just growing, catching up with the US. And then they blasted by us again just about a decade ago. And it hasn't changed since. It's just crazy to think that here in the US, we're aiming to produce a 4.3 billion bushel bean crop or something along those lines. And Brazil's up over 6 billion. I think a lot of times in the US, we don't, we hear, 169 million metric tons, and it doesn't really register. But when you start saying 6 billion bushels compared to the US at 4 point something, that's where it really makes a difference. But the biggest thing here is when you have a really quick growth in production like Brazil has seen, you have to what do you do with the bushels? You naturally export them because you have a lot of cheap supplies on hand. And this chart is one of my favorites just because it shows the crazy growth in Chinese bean imports. That's on the red line. And then you can see Brazil's soybean exports. I mean, they're moving in lockstep. And so, do you want to say that this is causation or correlation? I mean, these things are very closely related for a reason.
No, that is a great point, and it's a amazing contrast when you compare these two things to really see how much this China and Brazil have kind of been in lockstep here, really over the last couple of decades. And China in itself has had a big dominance, I would say, when it comes to global soybean flows overall, right, Susan?
Yeah, so I just made this one yesterday. I just wanted to help illustrate how dominant China is as far as soybean imports go. So the blue bars represent the rest of the world. So all of the other countries that are importing beans each year. And then the red is China alone. So China has held a roughly 60% share of all soybean imports in the world, going back to, I think it's 2009. And like this year, for instance, I think there were 60 other nations that are importing beans, but we can't even, those nations combined can't even come close to the amount of demand that China has.
Well, let's look back at history a little bit here and put some of this into perspective for us. Any similarities or differences when we had trade war 1.0, back a few years ago in the first Trump administration to now? What are some of the similarities or differences that you are seeing when we put it in the perspective of commodities?
Yeah, the interesting thing is that the dates are eerily similar. Now, the main difference being that Trump didn't begin kind of his war against China until he was in the second year of his first term. And this instance, he was after it right out of the gate. But we saw, China made their big announcement as far as retaliatory tariffs on U.S. soybeans a couple Fridays ago. And it was actually the same date, April 4th, that we saw them first announce retaliatory tariffs against U.S. beans in the first trade war. Now, the difference, though, is that we didn't really see things escalate with China until I believe it was more like June or July when the tariffs actually went into effect, and we kind of started seeing a lot of the real fallout. But history doesn't repeat itself, but it often rhymes, and so that's why I put this one together, just because it shows leading up to the date that first trade war started. You can see in the fall, China's we're a huge shipper to China during U.S. harvest in the fall, and that's the red lines there, and then the blue columns represent all of the non-China destinations we're sending bushels to. But naturally, when we get to the spring months for us, China they shift their business to Brazil anyway, because that's the time of Brazilian harvest. But what you can see from this is once we got into the back half of the 17-18 marketing year, we went China quit us cold turkey for several months there. And then we hit the major pain point in 2018 because we had, I believe it was a record crop here in the US, and we literally had no China business. So that's what really, really hurt and tanked the US bean market. Not only putting pressure on futures, but basis wise, if we had crazy carries in the market, it was a horrible time. At the time, I was working for a large grain company, and I was based out of a river location, and so it was a fun experience. But moral of the story is we didn't, and as you can see from the chart, we didn't really see China return to normal business until we saw some of those negotiations. And then, the whatever deals, phase one, I don't know, lost track of them all. But it took us a couple of years before we returned to more of a normal exporting pattern. The other big thing here is that you see, the Chinese business disappears because they're going to be sourcing beans from Brazil or any other nation that there's not a massive tariff imposed. And then that leaves Brazilian premiums going through the roof because suddenly, it's not that they have new demand, but it's that they have this demand that's all forced into one spot. And so that leaves the rest of the world coming back to the US. And we've seen that a little bit here this past week with some flash sales for old crop bushels and a little bit of new crop business done. But that's just showing that we're still very price competitive into places like Europe or Egypt or some of these other nations that still need to buy beans.
Nobles, Susan Stroud joining us here today on Market Talk. And I want to ask you about some of the price action we're seeing in Brazil right now. I think that's key. You brought up how, we're getting into the seasonal time of year where the U.S. is not shipping out a lot of soybeans. A lot of that activity goes to Brazil, for instance, et cetera. Walk us through just some of the cash grain activity you're seeing down there and why it's significant and why we need to pay attention to it.
Yeah, there's a crazy divergence right now in Brazil, and it's been happening for the past several months now. So they have a strong domestic demand. They have a growing corn ethanol program in Brazil, and so it's really starting to impact export premiums. That's a lot of the reason that the U.S. has seen a decent amount of business and a strong program this year. But it's really wild when you look at corn prices in the heart of Mato Grosso, Brazil. They're already up more than 30% year to date, and they're up more than 100% year on year because of a very tight stock situation. Now, beans, on the other hand, and let's keep in mind the timing too. So with soybeans, it's a much different story. They're actually lower year to date and pretty much unchanged year on year. Now, the difference being is that they're wrapping up harvesting a record bean crop in Brazil. And so now they have second crop corn, which is their predominant crop. It's growing, and actually it's off to a very good start. Weather-wise, things look great there. So, when you think about you have very tight corn stocks and you're waiting on that next crop, this is classic, what we might see here in the US or something if we were in a really tight stock situation in the summer months. It's very similar.
Yes, very true. It's an interesting thing when you take a look at things like this, that divergence and more. And we've spent a lot of time talking soybeans here today, but I do want us to spend a little bit of time on corn and just some of the positivity surrounding U.S. corn exports. I mean, that is a story that, I feel like week in and week out, we continue to see good news on that front, but it's not being, I would say, widely talked about. I think it's getting lost amid some of the other headlines out there, Susan.
Yeah, I mean, this has been one of the reasons that corn has held its own, especially here in recent weeks when we've seen a lot of pressure on the trade front. I don't want to say that corn escapes the pressure because China doesn't have any US corn on the books, and it's definitely not, China has not been active in the world corn market whatsoever this year, but that's a known. So I don't want to say it's totally insulated, but it definitely is winning by default when you consider that from a tariff perspective. But one of the biggest drivers behind the large U.S. program this year, it's because of very tight stocks and the other major exporters. So when you look at the U.S., Argentina, Brazil, and Ukraine combined, they're generally 85 to 90% of world corn exports each year. So these four countries are what really rule the corn market as far as supply side goes. So Brazil, for instance, we just talked about them. Smaller crop last year, tight stocks, a growing domestic demand program. And so those things are limiting their export availability. It's raising the price there domestically, and it's kind of cutting them out of the market. Ukraine, Ukraine is northern hemisphere and has a crop cycle that's very similar to the US. So they had major weather problems last year that reduced their production. And the interesting thing about Ukraine is they typically export 85 to 90% of their corn production every year. And so there's a direct correlation. If they have a drop in production, then you're going to see a drop in exports. So that's one thing that's been a big boost too for the U.S. is because we're the only northern hemisphere supplier that actually has supplies. And then Argentina too. They're about a quarter of the way through corn harvest right now. But again, the U.S. market remains kind of the only game in town until we're able to see Brazil safrinha bushels finally hit the market in June or so, and then beyond. And still, Brazil's relatively expensive, and I'm not sure that from an export perspective that they're not going to be the supplier this year like they have been in years past. And then you've got the market waiting on new crop Ukraine and new crop out of the US. And so for those reasons, this is why you see the strength in old crop corn, and I guess I should say the continued strength in old crop corn. And we're in the middle of executing on this really big export program. This is one of our largest export programs, and in fact, it might be our biggest program that did not have China present as a major buyer. So this is really a really big deal for the U.S. And when we see these record inspections or near record inspections each week, I mean, this is the time of year seasonally that it needs to happen anyway. But at the end of the day, it's been very good for the U.S. corn market and the U.S. farmer finally seeing some life in corn.
This has been a fun conversation, and we're going to have to do this again real soon. I do want to give a plug, though. I know you have your conference coming up this July in St. Louis, and with all the uncertainty going on in the markets right now, you titled it Certain Uncertainty, AgriNext. Talk about that conference coming up this July, Susan.
Yeah, I struggled really bad trying to figure out, okay, what's the topic or theme this year? I feel like I was dragging my feet on it, and it's because we wake up in a new world every day. And so I thought, okay, you know what? Well, let's just go with this because everyone's feeling the same frustrations and uncertainties. So I went with certain uncertainty, trade policy, and the future of ag. So I'm really looking forward to it right now. I'm in the process of locking down speakers, but I think it'll be a really good event as tariffs are front and center, but we also have so many policy changes that are, I mean, this is part of what's driving it. For instance, we're only a couple of days away from the U.S. trade rep making the announcement what we're going to see with this proposal as far as the Chinese built, owned, operated vessels entering U.S. ports, some things like that. So I'm pretty excited. Plus this year, instead of just a cocktail welcome reception, we're doing a riverboat cruise, a dinner cruise on the Mississippi with a tour of the St. Louis Harbor, which is known as the Ag Coast of America because of its I think St. Louis loads at like 2.5 times the tonnage of any other port in the inland waterway system each year. So it should be a really good event.
It sounds like it's going to be a great time. And I know if folks want to stay on top of the agenda, get signed up and more details, I believe they can find that all at nobleag.com, right, Susan?
Yeah, that's correct.
Nobleag.com for more. And we appreciate the time. Susan Stroud, thanks for joining us here today on Market Talk. We'll wish you a happy Easter, and we'll get you back on the show again real soon. Thanks so much.
Sounds great. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.